The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, welcome on back here to TFNN.com and playing TFNN's best country. Anyways, thank you so much for joining us today. My name is Darrell Martin, and I am the host right here for you on the Diagnostic Trading Hour. You can listen to us at TFNN.com and check out Tiger TV. You can check us out at TFNN.mobi, or if you're live inside the eSignal platform, you can see us broadcast in there each and every day with 10 hours of live radio commentary. All right. So let's check out what else we got going on this morning. Well, right now we got the S&P is down 9 points after bouncing right off of a one deviation move. I had a couple short plays going on in the trade. And what I was looking at was a break below 1931 to go ahead and go short down to 1938. Target 1924, possibly even 1920, which would be the one deviation level. Looking for right there an 11-point take profit. We hit that one deviation level. I was like, hey, let's go ahead and go long based on everything we got in our trade setup, our trade plan. Could use a buy stop at 1910, but also, just to get out of there. But really targeting the 1.5 deviation level on the way down if we did hit that. But our goal going long at 1920 was to get out at 1931 and for a nice big bounce on the play. As you can see, we hopped right on up to that, just a bit above that. We expired right out at 1932. And I got in the trade a little bit higher when the market was at 1920. I was about at 1922. I was talking at the same time to some other traders, going through some stuff. We were walking through the trade. A little bit higher than I wanted to get in, but still not bad. Got into a trade 1928 with a target of 1931 would have been, the risk on the trade would have been $30 to place the trade. Well, put the trade on, $30 risk, took the trade, actually had to take profit in there, didn't get hit, went into the dark zone the last couple minutes there, expired out at 1932, made 4 points on a 3-point risk, netted a $400 profit on 10 contracts. And that's just one simple way to use the deviation levels and, trade. So there's a lot of different ways to use them. Like I said, we used them on the way down to go short, to know when to take profits, where to tighten their stops. We also used them to know when to take the reversal and go long. All right. Well, that summarizes that trade. Let's look at where else we are and what else we got going on. Let's check out our mid-time lunch market wrap. Like I said, we got the S&P currently down about 9 points. The Russell's up a point, showing strength compared to the other indices at the moment, even though not by much. We got the NASDAQ up 17 and the Dow's up 56. Copper is currently down 1% on the day. We got gold pretty flat on the day with silver down 1.5%. Big moves on those metals markets. If we hop on into the energy sector, we got oil down about 20 cents. We got natural gas down 1.8%. So some big moves. Let's take a quick gander look there at natural gas and how it turned out on the day. And let me pull that chart up. We're going to hop on over to our 10 minutes. We're going to look at expected moves along this. So let me go ahead and, I'll just throw on the indicators to be easier right here. So we got our toolbar shortcut, and we got our expected range. And let's see what happened. Did we stay within or go outside of the expectations on today's natural gas release? We stayed within it, so we got right to it. Remember, it's a high to low, just like the deviation. It's a high to low. It popped up, and then it came on back down within like a tick or two from the high. It, just barely missed hitting the exact expected move. We had some early movement on the previous hour. Usually we don't see that, but we saw some big move just right out of the gate, right at the front of the hour in the first 10 minutes on natural gas, and then it went flat right there at 9 to 9:10. Went flat, and then waited on that report to come out, popped on down, and really did move our expectation, and gives you a lot of potential ways to play the trades. All right, so that gives us that wrap. Let me go ahead and pull up what else we got going on. I got one more thing over here. Let's get to figure out where I put it at. All right, here we go. Let's see here. Okay, there it is. All right. So we did have a little bit of choppiness and all that stuff going on, but, there's still, like I said, plenty of opportunities today. And just, a matter of getting that plan together and putting it into action. And like I said, I am working on getting these plans to where I can ideally get them out to you as a newsletter feed. And we got the market down. Looks like Russell, even though in its choppiness, did stay within the 0.5 to 0.5 ranges there. Busted out just a little bit here at the end, but moved a 1 deviation move on the day. We got oil after some big falls this week, and still had a pretty nice run down. We moved all the way up to 2 1/4 deviations in the overnight session before it ran all the way back up. And where did it run back up to? Settlement. Like I said, got +1, -1, you got 1 high to low, and you got settlement. Those are your big deviation levels. And it ran right back up to settlement before pulling on back down. NASDAQ having some nice clean moves this morning. And let me get that up there for you. And we just had a nice short going on. It's pushing on down right into the 1 deviation level before, what do you guess, a 1 deviation. And a bounce right off of that. S&P, I already talked about taking that on down and then taking it on back up. And didn't really have the cleanest elite moves this morning, but we did have some good short trades on it, and we did have a great elite bounce, along with plenty of momentum scalps on that nice, smooth down move going into the 1 deviation. And we roll on over. We can check out gold. Gold a little bit choppy today. And, moving around a little bit all over the place, almost a deviation move. Actually, it looks like we did break a deviation move from the up move earlier in the morning. And when we pulled on back down, we got a deviation from the high, almost a deviation from the low here, back around the top of the 12 o'clock hour. Hopping on in, checking out the Euro-Yen to get us a little variety there. And on that, we got some great MVP, 10-minute MVP trades. We got short entries. We got long entries. And got another long entry in progress. Checking out the euro-dollar. We are post-lunchtime, though, so be careful. Things do slow down and tend to chop a little bit more about this time of day. Hopping on over to the euro-dollar. Same thing. Great 10-minute MVP trades. Great movements last night. Things were just taking off. And just some great moves. Took a little bit for it to take off, but when everything woke up, it really woke up. And then moved on down going into the euro session. Another FX pair for you today. We got the pound dollar is moving on down, but some great, again, 10-minute MVP moves that you could take advantage of. All right, so what do we got going on today with the news? Well, let's pull it up. Let's check it out. And right on over here, let me get our fundamentals calendar up, and then I'll go over the news with you and what we were looking at. Like I said, we got some pretty big moves. And sometimes a little bit more than normal. It's just been a crazy week. So let's see, how did the plan work out? And what all were we looking at for this morning? We got NFP tomorrow, so don't forget. This morning we had the minimum bid rate. We had the press conference. We already talked about natural gas. We got retail sales coming up tonight. So we also had the pound PMI from last night. Okay? So looking on over here. And going through, and not all the trades going to work out, but let's see how many of them did. Let me get out of these. And I'll open up the reports over here. All right, so let's go ahead and start off with the pound dollar PMI. Right there. So pound dollar PMI, the trade we were looking at on the setup here. Let me get that up. And pin it to the top so we can see it. All right, so we're looking at 11 p.m. entry to a 7 a.m. expiration with $30 take profit on the pound PMI. Let's back up, look at it, and take this on over to 2,300 hours right here. And pretty big move, a lot bigger than we normally have. We got a 76-pip move, so a big move. Like I said, they don't all work out. And let's see here. But it stayed pretty close to within our 1-to-1 ratio on the range. And again, that's getting in as late as that time right there. Let's go in. Let's look at the next ones we had lined up. We had a potential euro minimum bid rate trade, so let's pull it on up. Let's see if they all came out. Still got some moves left on euro dollar with the press conference. But on the minimum bid rate, going into that, looking at a potential 7 to 9 o'clock. Let me zoom those hours out so we can get accurate numbers on it. Okay, so we got in at 7 o'clock right here. We got out at 9 o'clock right there. Got a 23-pip move. We were looking for a 30-pip move or less. We got our less move. Made a small profit on that trade. Not as much as we would have liked, but nevertheless still a profit. Then right at that time, looking for some volatility. We definitely got some volatility, just not near as much as we'd like yet. Day's not over. You got to run on down 36 pips. You got to run up right over here of 31. And so we'll see how that trade turns out. Like I said, the day's not done. And currently we're sitting from the 9 a.m. time. We're sitting up at about 20 pips. So depending upon what straddle you put on and how you work the trade. All right. We got U.S. unemployment claims coming out, so don't forget about that. That also causes a little volatility whenever that report comes out for us. Let's see how the unemployment claims fared this morning. They came in a little better than expectations at 287. That is also better than the previous report. So that was a positive thing for the market there. But overall, we don't really trade the fundamentals directionally unless we're doing volume spike reversals on it. On the natural gas, let me get that one going up. We'll look at it, see what we have. Give me 1 second. Got some pretty wild moves going on. We usually do have some pretty wild moves going on in natural gas. Still moving on down. Let's see if the spikes were able to help us this morning or if it was just the ranges. And on the natural gas inventory report, let's see here. We'll go into it in a second. But it looks like in-the-money buys did work out. Though they were very close. So if we go in there and really try to zoom in on them, basically bought right here, in the money contract, expired in the money, got another buy in the money contract, expired in the money. And let's see, these did not trigger off. Let's see, you got another buy right there, would have expired in the money, but again, very close. A lot of really just close, flat trades. Got another buy right there, would have expired in the money. Let's see, at sell, that one expired definitely in the money. Got another sell that was definitely in the money. So we got a good variety of spike structures this morning, all profitable if you're focusing on those in the monies. All right, stay right there. We'll be back right after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. Let's see here. Wrapping that piece up. Okay, so we talked about the Euro 9 condors, the unemployment claims, natural gas inventory. So put a lot of those pieces together and had some nice spike striker buys on that as well. Now, let's see. We got copper is falling to 16-year lows. So some massive, massive drops in copper. And I guess if you want to, redo the Statue of Liberty right now, that's a good time to do it. Remember when I was a kid, I told my daughter about when I was a child, and we went in, and I remember all the kids saving up all their pennies to give the Statue of Liberty a makeover. We saved up all our pennies, and we sent them in, and they did it all across the country. This was a while back. But anyways, copper's cheap again. So if she needs a facelift, it's time to do it now. But it is way down there. Like I said, breaking 16-week lows. ECB reports really not impressing anybody. We got Europe, and they're falling to 7-month lows on a lot of their stocks. Just a lot of disappointment on what they came out with on their press conference. People were not super happy. We got the yen in its steepest decline going on in 20 months. Just some crazy volatility. The Aussie has just been getting hammered. We got oil it decides to hover a little bit for once, but it's had those $3 moves, just down, bam, popped back up a couple bucks, flew down another $3. I see one story about dollar under pressure. I'm not too worried about the dollar right now. King dollar been moving, but it may be at an essential point. I think we're at a very strong point where we might start to see a little bounce from this fall off the recovery on the indices. And, we're at some pretty important levels. We'll have to watch and see what happens from here. But I'd be surprised if we didn't see some pretty big pop-ups over the next few days going into next week on the indices. But people are really hopping out of those European equities like crazy. And, a lot of that's going into the European banks and the U.S., Euro press conference and everything else. So, anyways, it's a lot of volatility. I think as that continues to happen, that's going to give the dollar, more strength. But it's obviously had a little pressure, and that's what slowed down that drop in oil. And, I made gold shelled a little bit, but still all the big moves. We still see the big moves in silver and everything else happening in copper. All right, what do we got for the news coming up tomorrow? Before we go to that, let's take a little gander, a little look over at where our contestants are. So we pull this on up and go on into the TFNN virtual trading competition on Nadex. And I know there's people out there right now going, man, I wish I would have registered, So to stay tuned, we'll have another one. I don't know when, but it'll come. We got some people in line to make $3,000 cash. We got people making $1,500, $750, $500, $250. We got daily winners, 5 a day, getting $100 cash right there, given to them, plus a copy of Tommy O'Brien's book, Timing the Trade. So let's see where we're at right now, and what we got. Well, we got people up to $40,000, almost $41,000, and seeing some definite volatility. And let's look at something. I'm just curious. I want to see what we got Fady doing a great job. He's been up there twice so far. We got Najar coming up out of nowhere. So I don't know where he's been, but he's definitely there now. We'll see if he can maintain that. Norwood, 3 days in a row, staying in second place. So complete props to you for that consistency and keeping that going. We got Yip been up in the last 2 days. We got some newcomers coming in, and I Kurzemine, I'm sorry, I don't want to slaughter your name. I apologize. We got Skoronsky there. 1, 2, 3 days. So went from third place to fourth place to sixth place. Dropping down a little bit, but you know what? Got to give him a lot of credit. Staying up there on the leaderboard 3 days in a row now. And that's what impresses me. More than the big number, it's the ability to stay up. That consistent income is what trading is all about. Anybody can have a great day, but can you have a great week? Can you have a great month? Okay? And let's see, who else we got? We got Pierce. Looks like he's a newbie on the board, so congratulations for making a good comeback right here in the middle of the trade. We talked about Fady, already on there the last 2 days. We got Koslov. Let's see, newcomer, congratulations, Klein, bumping on up. So, stay right there. We'll be back right after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. Again, just want to give props up to our traders who not only are doing well, but also who are staying up there consistently, and to the newcomers coming on up. And, of course, to our daily winners. We have 5 a day, and we got another one right now. We got Paul Wellenberry right there. You're on the line, Paul?
Yep. Hi.
How you doing, man?
Well, I'm doing good. Thank you.
All right. Awesome. I'm glad to hear that. Well, hopefully you're doing a little better now. You just won $100.
Fantastic.
And also, what's even more valuable is a copy of Tommy O'Brien's book, The Art of Timing the Trade. So I've read through that book a couple times, and it has helped me a lot in my trading. So you enjoying the trading competition?
Yeah, I am actually.
Learning a few things, sort of seeing how things work?
Yeah, I'm kind of figuring out how this thing works. It's kind of cool. I like it. Yeah.
Sweet. You can't beat getting some real cash on a trading competition no matter where you're at on the leaderboard, right? That's sort of nice.
Right. Well,
yeah, either way, you won $100. So, whatever you traded demo, you won real money. It doesn't get
cool.
too much sweeter than that.
Yeah, that's cool.
Awesome. Well, I just want to say congratulations. Want to call you up, let you know live on the air that you were a winner. Keep it up. And if you have any questions about how to trade on Nadex at all, I'm your man. Definitely give me a call. I'd be glad to help you out, okay?
All right, great.
All right, man. You have a great day.
All right. You too.
All right, so another great winner right there on our TFNN virtual trading competition right there on Nadex. And, keep placing the trades. As long as you place in a trade a day, you're in the competition. You get in the random selection drawing, 5 a day are going to win. So, anyways, very cool. I can't wait to see who does end up being the champion in the competition. All right, and I want to talk to him. So, let's see where we're at. A lot of them I already know. I know probably about half the people on at least by first name on that leaderboard. So, I may know the other ones, but I definitely, a lot of people I just know them by their handle that they use. But half of them I know them by first name. So it's just fun. It's like, so were you just lucky for 5 days in a row, or did you actually have a plan? And I'm guessing the ones that were up there every day had a plan. All right, so let's check out. We got news for tomorrow. And I talked about this yesterday, and I got to highlight a couple things just to make sure, you don't go off on the deep end and, do the wrong thing here. We got ADP's done. That's the little report. We got the big report. We got the NFP. And I've talked about a couple of the other trades. I talked about the PMI and, stuff like that you can look at. But really just understand that a lot of that is going to be overshadowed. Okay, again, it's going to be overshadowed somewhat by, or maybe completely by, unemployment. So don't just jump right into those, okay? Just be aware of what's going on. If everything's going nuts, then to stay out of that CAD trade balance report, stay out of that U.S. ISM non-manufacturing report, okay? You may want to steer clear. It's up to you, but I'd definitely be paying attention more to the unemployment rate and the NFP announcements. And one more time, because there's so many stats, I want to make sure you got it, okay? We got the Aussie dollar. We have an expected move of 60 pips. Okay? The euro dollar, we got an expected move of 100 pips. The pound dollar, we got an expected move of 100 pips. This is the average over the last 2 years on this. So sometimes it may be 70. Sometimes it may be 130. Okay? The dollar CAD, we have an expected move of 75 pips. Dollar franc, expected move of 92 pips. And dollar yen, expected move of 80 pips. Understand, this is an expected high to low. 100 pips may be up 50 from right when the announcement came out to down 100, meaning only 100 high to low, but technically only 50 up and 50 down from where it was right before the news release. Hence, that's where the iron condor is coming in, buying the lower spread, selling the upper spread. We get a lot of implied volatility use that comes in the market right at 7, 8 o'clock. We start seeing that IV getting pumped in for this big expected move. Is there going to be a surprise? How is it going to impact everything? This is so important because it's one of the things they're using to decide when and how fast they want to raise interest rates and et cetera, et cetera. So it has a massive impact. The dollar has been moving like crazy. FX has been moving like crazy. Any kind of surprise, this thing can move like crazy. If it's just on par, may just get the pop and drop, and the IV may just get sucked out, what's called a volatility crush, which would be great. We love volatility crushes when we're doing iron condors because we're the collectors instead of the payers of the premium. So what kind of minimum profit are we looking at? So I listed off the expected high to low ranges over the last couple of years that we've had on these FX pairs. Now what I want to ask you is, how much should you be looking for as a minimum profit on each one of the pairs when you do an iron condor? An iron condor, for a review for you, again, is when you go in and you buy the lower spread and sell the upper spread. Pardon me. All right, so on the Aussie dollar, we're going to go in and do a minimum profit of 50 pips, okay? On the euro dollar, we're going to do a minimum profit of 60 pips on the trade. On the pound dollar, we're doing a minimum profit of 70 pips. On the dollar CAD, we're doing a minimum profit of 60 pips. Dollar franc, minimum profit of 60 pips, and dollar yen, minimum profit of 60 pips. So to make that really simple for you, euro dollar, dollar CAD, dollar franc, dollar yen, 60 pip minimum profit. Okay? Pound dollar, 70 pip minimum profit, and Aussie dollar, 50 pip minimum profit. Hopefully everybody got those notes down. You also can look in case they're really cheap. And in case on those expected ranges you might think you can pull off a good straddle, you could look at a straddle. You could look at 9, 10, or 3. And most of the big move usually happens in the first 15 minutes. But don't just, if you see a 9 o'clock that looks good, make sure you look at the 10 and 3. That's what the scanner's for. It helps you look at all 3 time frames. I've seen 10 o'clocks, and I've seen I got a 3 o'clock for $10 more total on the straddle. If I can get 4 more hours for only 10 more pips, I'm all about it. And you can just watch something that's like drift all day long in your favor. So don't rule out the straddles. Now, I went over this a little bit yesterday, went over some more with some traders this morning. And for those of you on the show, I want to make sure you don't miss out on it. And I talked about the synthetic advanced straddles. If this is your first NFP to trade on Nadex, I don't suggest it. If you've never done a straddle on Nadex, I don't suggest it, okay? The most volatile pairs on Nadex are the Euro CAD and the Pound CAD. But they're not on Nadex. Well, yeah, they are on Nadex, okay? You have to do them synthetically. And this is what I was going over with some traders this morning on the synthetics. I was saying, you know, for example, you can go and you can do what's called a natural. You can go in and buy the upper spread, or you can buy the Aussie yen, you can sell the Aussie yen, okay? By buying the Aussie dollar and buying the US yen, you can also do that. So there's more than one way to trade the Aussie yen. Why is that? Well, if you take yourself way back to school in algebra and you look at A over B times B over C equals A over C, because the B's cancel out. A over B, Aussie over dollar times B over C, dollar over yen equals Aussie over yen, because the dollars cancel out. So still, why don't I just trade the Aussie yen? Well, you can. But what about if you want to trade the Euro CAD? Why does that matter? Well, because it's the most volatile pair. 100, 150 pips often. Okay, average move. Euro dollar times the dollar CAD cancels out the dollars and gives you a Euro CAD. Okay? And you go in and you buy the Euro dollar spread, upper spread. You buy the dollar CAD upper spread. That gives you a Euro CAD upper spread. And then you short the Euro dollar lower spread. You short the dollar CAD lower spread. That gives you a Euro CAD lower spread. So now that I've talked about it, I've walked you through it, let's look at doing it. What would that actually look like? Okay? So let me pull that up. How would you do this fun math? Now, again, this is really diving in the deep end of the pool. Don't let this be your first straddle, and don't let this be something that would intimidate you from trading straddles, okay? They don't have to be this complex. By the way, they have Aussie yen binaries, but they don't have Aussie yen spreads, okay? So this is how you could also make your Aussie yen spread if you wanted to. But if we go over here, and let's get rid of that. We already talked about the plan. And we take our little sheet up here. And we go, okay, well, what if we were going to, and let's just try to find a straddle real quick. So to find a straddle, the easiest thing to do is put 1-to-1, put $100 max risk, and then let's just find a couple points that hopefully come together. Let's see. See if we can get a higher one than that there. That's a little better. That's even better. Okay. So 1.1150 on the buy side, 1.1150 on the swing on the sell side. There we go. There's our straddle. Okay. So on that straddle, you'd pay like $17, and all looks good. All right. So that's our upper and our lower spread on the dollar CAD. But what if we went? And what's funny is if you're doing all these, you're actually still doing it anyway. You don't even know it. Let's go and look at the euro dollar. Let's see if we can find one that lines up. We do want ones with the same expiration time. There we go. So we got a 2680 and a 2680. 2680. Okay. So, all right, what do I do with that, Darrell? Right? Okay, we got next steps. So let's look at the euro dollar. Here's what we're doing. We're buying the euro dollar at, let me lay this out. I'm going to have to increase this a little bit. I'm trying to just break this down, help you wrap your mind around it. I don't expect you to just master this right here, but it's a cool lesson. I like to change it up and keep it interesting. 1.2680, and we got that, and we got, so that's our floor, 1.2780. All right, so we got that right there. Oh, this is our ceiling. Oh, this is our floor. Then our dollar CAD. We're going in and we're buying this at 1.1250. And below that we got 1.1150. Okay. So the upper spread is literally that number times that number and that number times that number. Yeah, that's not right. Got a minus in there. Times helps. There we go. Okay. So we basically got a 1.4377 to 1.4138. That is our spread that we just made. What did we buy it for? Well, we bought this one for 1.11. Oh, nope. Go here. We bought this one for 1.1160 on the dollar CAD, and we bought this one. That's the current bid, or sorry, that's the current offer price of the dollar CAD. The current offer price of the euro dollar is 1.2689. Okay? So that makes our offer price, entry price, 1.41609, which would make our potential risk on the trade over here to be 22 pips with a reward potential of 216 pips. Not a bad EuroCAD spread that we just put together. Okay? 22 pips on a 100 to 150 pip move. I like that. I'm not saying that's what it's going to be tomorrow. I'm just saying that would be what it would be like. That's how you do the math. Now let's go down here and let's do our lower one. Okay? On our lower one down here, bringing it on back, put in our ceiling, put in our floor. All right, so we're going to sell the 1.2680 by 1.2580. And we're going to sell the 1.1150 by 1.1050. And then we're going to buy the euro dollar one at 1.2670 and buy the dollar CAD one at 1.1146. And then what that would do for us right there is give us, we can just take these three numbers here, put them in there. That's letting us sell the 1.4382. Look at that, how that matches. Floor and ceiling of the lower spread. And that gives us a floor right there. And that gives us a short at 41.22, which, you know, this being risk, this being reward, and then risk and reward doing the same thing. Have to invert the formula a little bit. So we're going to go in here and say, okay, our risk is this number minus this number, so 22 pips. And the reward is the higher number minus the lower number. There we go. 162 pips. Still not bad. All right, we'll talk about this more when we get back. Stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. So I did a little bit of the math. I've been running through all the scenarios here. Wow, we had a commercial break there. And what I'm doing is I'm taking the total risk, okay, plus the risk on the other side, less the price I sold at. That tells me how low it has to go. And that lets me know, okay, well, how far does it have to go from the, the middle strike there? And that seems a little shy of what it should be. Let me double check that. So we got the total risk plus the risk on the long side, okay? And then we got to add that number. Oh, okay. So we got that number right there. But in this case, we need to make it a negative number. So times -1, because we got to, and then we going to surround that right there. And then we're going to subtract that from the short side. Come on. Oh, little formula error there. Okay, let's see if that works. I had basically 41.84, but not quite how I wanted to do it still. So let's just take, here we go. We'll do it this way. There's more than one way to skin this. We'll take the short side. This is much easier. Minus the total risk. Minus the risk on the other side. There we go. Okay, and then we'll take that. Let's see, how far down did it have to move? We're going to move down from 41.38, 78 pips. Okay, so what this shows me is this trade right here, if I were to take it, I had to go in, and the steps I had to do is I had to get the euro-dollar ceiling and floor. I had to get the dollar-CAD ceiling and floor of the bought spreads, and then of the sold spreads. I just multiplied the ceiling times the ceiling on euro-dollar and dollar-CAD. I multiplied the floor times the floor on the dollar-CAD and euro-CAD on both of them. I put in the offer price on the bought side. I put on the bid price on the sold side. I got my EuroCAD spread, 1.4378 to 1.4138. I got my EuroCAD spread that I'm selling, 1.413 to 1.3901. Again, these are synthetic spreads by buying dollar-CAD, buying EuroCAD, and then selling the lower euro-dollar and dollar-CAD. And then what that did is that gave my risk and my reward on both sides at a $39 total risk, $178 max reward on the upside, $182 max profit on the downside with the same risk on the combination total. If it moved up for me to make a 1-to-1, basically for me to put down $39 risk and make an additional $39, I needed it to move up 78 pips from where the Euro CAD was currently sitting. And that means up to 1.4216 and down to 1.4060. Now, I'm not going to know what the euro dollar, what the dollar CAD is going to be, because it could be any combination. The euro dollar could be flying up, dollar CAD could be going down. I mean, they could be going in any combination. So I don't know what they're going to be, so I can't just set my take profit. So what I'm going to do is I'm going to watch the euro CAD chart. When the euro CAD hits 1.4216, I'm going to be taking my profit on my longs, on both of my long euro CAD and my long US CAD. Now, that's if it makes sense. Okay? If I'm up 78 pips, and let's say I'm up like 70-something on one, and let's say there's only like $5 risk on dollar CAD, like it's barely moved. There's no reason to take it off, So let's see if there's some profit there or not. But as long as it makes sense, then we're going to take profit on both. We'll at least be taking profit on one of them. We may make more money if we only take profit on one. Then it flies back the other direction, okay? I can make money on the other side as well. But 78 pips, when I expect a 100 to 150 pip move, that straddle makes complete sense. Now, I don't expect that to happen in the next hour. That's really cheap. It's probably going to be more expensive. But can I take profit within less than 100 to 150 pips? If I can, that's a great straddle. I like that straddle. So that's how you do a synthetic straddle. And there's like 13 different combinations of synthetic straddles you can do and iron condors you can do on Nadex. All right, y'all have a great day. I'll see you tomorrow on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.